Okay, here's looking at some of the disadvantages. We've just looked at this one, and so sometimes you just have scenarios where countries are, like I said, resisting this need for having other standards because just the majority of their companies don't use that, and sometimes it is costly to now start realigning. These are all because if you think about it, when you realign these standards, sometimes these standards require you to go back to previous years retrospectively. And then you will have all these gains and losses that can affect the very recognition of profit and therefore the recognition of dividends, and you have all that to contend with. But lately there is some momentum really on harmonization. Um, so really, yeah, again, like I say, that's so from 2005, all EU listed companies were required to adopt IFRS standards in their group financial statements. Many countries are following similar suit: Australia, Canada, New Zealand. And typically, national standard setters are being brought together to discuss how they can kind of arrive at some kind of joint framework and how they can harmonize their standards, their national standards. And really, again, like I say, the trend is moving towards this international harmonization. Um, and if people keep working together, that's where things are going to end. So typically, even UK GAAP very much our financial reporting standards are lining up more and more with international financial reporting standards. So just some general info. The IFRS Foundation, really, this is sort of the overall kind of board, if you like, are responsible for the funding, for the, if you like, the contracting out of the development of these standards. So really the whole idea is to really investigate and to ensure that you have this smooth functioning development of these standards. So developing a global standard is what they're ultimately trying to do. So you like not just developing them, their aim is to promote the use and application of these standards. And if you like, so technically I say it's a board because what they will do is to bring men and women from right across the world into one sort of big area. And I think they're based out in New York, I think, and sort of get together and work on that. So like I say, they are responsible for the issuing of these standards. Their aim is to develop a single set of understandable and enforceable high quality worldwide accounting standards. But again, like I say with standards, you can't enforce them. So you do need national standard setters to sort of work with you to make it happen. So the board works in partnership with major national standard setting bodies. And again, like I said here, all the important major national standard setting boards are represented on the board, if you like. And of course, what technically happens, of course, all national standard setters, they issue, like I said, discussion papers, exposure drafts, where people in different countries get a chance to sort of discuss the standards and discuss what they feel would work best. So even it doesn't really matter, even looking at the elements, whatever assets, liabilities, expenses, whatever income, looking at particular instruments they feel would work the best way to kind of deal with it, and whether things should be recognized early in the income statement or not, whether things should just be entirely sent straight to retained earnings after disposals. It's really about trying to see what is close enough, if you like, to the concepts so that we can compare. Right. And really, I guess the argument is, as much as you want convergence, this seems to be a case of, well, if in scenarios where if convergence will lead to a lowest common denominator, poor looking standards, then let's not converge. So it's not everything you should have. You can allow alternative standards treatments. You just have to very clearly state what it is you're doing. So quite a practical way of thinking about things. And again, this is really much about trying to get support and the cooperation of national standard setters. And that's really the point. Working in conjunction with the UK Financial Reporting Council, which is responsible for setting the standards in the UK, and the US FASB, so the Financial Accounting Standards Board in the US. And again, like I said, what they tend to do is contract out these standards to different national standard boards to develop, and then to sort of discuss them and have people look at them and work on them, and that's really the main aim here. Then you have the IFRSC, which is, if you like, really looks at the interpretation of these standards. So where you have certain accounting matters where there are different people looking at things and we're seeing different interpretations. You have these sort of this sort of body that sort of looks at those interpretations and sort of seeks to address those differences, if you like, and and sort of areas that aren't being currently addressed by the board, because you do have events happening and then people are looking for a close enough standard to sort of use to interpret, if you like. So it's how do we sort of develop, not or we haven't quite developed the standard yet, but how can we best interpret and know what best to do in terms of recognition of a particular area. And then you have an advisory council as well that advises the board on decisions and priorities and that sort of thing, and just giving advice, really, if you like, to the board, to the to the board of trustees, really. So what is the process of development? Again, like I said here, the board identifies a subject, appoints an advisory committee, and they might, of course, issue a discussion paper to encourage comment. And then once they have the comment, they expose a draft, an exposure draft, and people keep looking at it and throwing out their views and what they think. And again, like I say here, it says the publication of an IFRS standard exposure draft or interpretation requires the votes of at least 8 out of 15 board members. So those are the key issues here. Right, let's jump into the framework. Let's look at the framework. I've already highlighted there's two ways of looking at the framework. We can have a principle-based framework or a conceptual framework. Sorry, principle-based framework or conceptual framework, if you like, as opposed to a rules-based framework, for example, as used in the US. So what is a conceptual framework? Again, I guess the argument or the point is in the term conceptual. So we have a sort of a coherent system of interrelated objectives, fundamental principles. We're almost looking at the spirit of the law, the substance of the law, as opposed to the form, or the legal form. When I say form there, the legal form. So we're really looking at that underlying, and it's quite an open thing, isn't it? It's just trying to see how do we look at things conceptually. And because we're looking at things conceptually, we're not firefighting, because we're not saying, well, it says this is what it says, this particular figure. No. We're just saying that generally we can see the general issue, and so we can agree as to what a rational man or a fly on the wall would argue is the best way to treat this. And so, yeah, I think that's really the key one, because it means that we can agree quickly. So for a while, there's not been a definition of the basic term of asset, or should I say, it's been evolving, the definition of an asset, because we're having new types of assets coming on board that don't quite fit what was considered to be, if you like, your classic definition of an asset. I remember we started talking about an asset about something you owned. Sometimes now you don't need to own it; you just need to control it. And the question was it just if you like, did it have to bring in any future economic benefit? That was another issue. What if you just had the right to use the asset? So you can see that the word right has come in to this thing. It must be an economic resource. What if you're just holding on to it and it's not quite bringing any economic benefit just yet? So you've had the need to kind of spend time trying to redefine and give a new definition to these elements of the financial statements. Because again, like I say, transactions are becoming more complex and businesses are becoming more sophisticated. So this is important to think about. Again, yeah, and that's kind of that. So accounting standards based on principles are thought to be harder to circumvent because, like I say, it's very much in substance, and this strengthens the credibility of financial reporting and the profession. And again, it makes it harder for vested interests to sort of if you like, take advantage. And it says this is the approach used in the UK and by the board. And of course, the revised conceptual framework was issued, big date important, March 2018. Of course, there's the alternative, again, which is the rules-based. And this is very much a prescriptive sort of cookbook of numbers and benchmarks. And again, Sometimes, of course, principles are harder to circumvent, of course, and therefore preferable to a rules-based approach. Well, that's what we think in the UK anyway, because again, it's the substance of the transaction. It's the substance of the transaction. Cool, great. That's 10 minutes as well. Just because this is all very, like spoken, I think it's best to have these short vids. Okay, see you in the next video.